Hello, everyone. I hope you all are with me right now. Welcome to day two of ACCA Performance Management webinar, and I am Rizwan Mania. Uh, I hope you all are ready for today's exciting class today, and I'll make sure that today's class give you the confidence and give you the skills required to tackle this very good paper that is performance management. I need my audience to be very much active today. I'll be uh, giving you lots of tips and tricks, lots of things that will make your life easier in performance management. And yes, I need your feedback. So please do give me your feedback by the end of the session. Make sure you don't leave the session before it ends. And yes, remember, if you are not part of the WhatsApp group up till now, please do join the link. The link is also available on your PDFs as well. If you just download the PDF that has been attached with your portal here, so you can get that PDF as well. You can just click this link and just join the WhatsApp group. If you are not being able to join the group, our representatives will share the link right now. And even if you can't join, so just send me a quick WhatsApp on this number, that is +992 2436 Just WhatsApp me and I will send you the link. Okay, so if you are not part of the WhatsApp group, you need to be, because this WhatsApp group is a big resource for March 2020 attempt for you people. So guys, let's start with the today's biggest rocking session. And now first I am starting with uh day two plan, and my plan today is to start with transfer pricing. So let's start with transfer pricing. What is a transfer price, friends? In a very basic sense, if I give you a quick understanding about transfer price, so let me just share a few things in front of you. For example, there are two divisions of a single company. One is division A and second is division B. So if division A and there is division B and there is a group, I'll give you a quick understanding to just create your understanding here as to what you need to keep in your mind when it comes to transfer pricing. Just give me a minute, please. Okay, so guys, for example, there are two divisions of a single company, and division A makes caps. You have seen caps of a marker, and division B manufactures the remaining marker. Okay, so division A manufacture caps, whereas division B manufactures the remaining body of the marker. Now, these are two divisions of our same company, and they are doing trading with each other. So they are trading with each other, and if you see that, what should be the price at which they should exchange this cap now? So division A needs to sell this caps to division B, and division B will use this cap, and division B once will use this cap will sell the market in the market. Now, for example, division A will sell this marker for let's suppose 6. Okay, and the cost to make this marker is $5. So you can see the profit of division A is $1. Okay, I just want to give you a quick understanding before I start my past paper question. Now you need to understand, if division A is a seller, and division B is a buyer. So the price at which division A sell the cap to division B, that price is known as transfer price. And transfer price is revenue for the seller, but transfer price is cost for the buyer. So it's a cost for the buyer. And for example, the cost of this cap to division B will be $6, obviously, because division A is selling this marker to division B, and for division B, this transfer price will be considered as a cost. So this is important to understand that transfer price is revenue for the seller and it's a cost for the buyer. Got it, everyone? Let's add some other costs that B will incur to prepare the remaining part of the marker, and maybe that would be around 8, for example. Now, how much profit does division B earns? So let's see the selling price. So selling price of the marker is, let's suppose, 15. And if I deduct from this 15 this $6 and this $8, so I can work out the profit. So profit for division A will be 1 and profit for division B will be 1 as well. Agreed, friends? Are you all with me? Say yes. Come on. I need to see the word yes in front of my screen. You need to be active, okay? And do give me the feedback of the today's session. It's very, very important session today. That's great. So now this is the individual profit for A and this is the individual profit for B. Now let's consider the group. The group. So group. So from the group's perspective, what happens? If I start doing accounting for the group, friends, what do you think? The revenue for the group would be what? Do I need to add 6 with 15 and then write the group's revenue here, which makes 21? So the answer is no. For group, the revenue is not 21. So how much is the revenue for the group then? So the revenue for the group will be the genuine revenue. The genuine revenue. This is the genuine revenue that will be the group's revenue. Okay. So what about cost? So do you think the cost, this one is 5 plus 6 and that makes around 11 is the cost? So the answer is no. No, the cost is not 11. So how much is the cost? The genuine cost. What is the genuine cost? This 5 is the genuine cost and I'll take here just 5. That's strange. Now what? Is this 8 the genuine cost? The answer is yes. So how much is the profit? The profit is $2. That is 1 plus 1 is equals to 2. So what happened, Vifians? What happened here? We cancelled out two things. What we cancelled out? The internal buying and selling has been cancelled out. That is, the internal selling price and the internal cost have been cancelled out. So this means at the group level, at the consolidation level, you know about the concept that at consolidation level we cancel out the intra-group transactions. Do you think that is right? Yes, this is the same thing that we have done. At the group level, the internal buying and selling will be cancelled out. Agreed, friends? So you have cancelled the internal selling price with the internal cost at the group level. So for the group perspective, you just have to consider the genuine cost. And This is the genuine revenue, which is external to the group. This is the genuine cost, which is internal. This is also external cost that the group is actually bearing, and this is also the external cost that the group is bearing. So I hope all of the friends are clear about this concept, that yes, transfer price are important for individual divisions, like you can see here, but at group level, transfer price will be cancelled out because it's an intra group transaction. So at group profitability, we will not show the transfer prices. So guys, are we clear about this concept? Say yes or no quickly. I need your response. So what I have learned here, is that transfer price is a revenue for the seller and it's cost for the buyer. Are you listening to what I'm saying? Secondly, what I've learned, that at group level, the transfer prices will be cancelled out. You will cancel out the transfer prices at group level. You will not show transfer pricing at the group level. Okay, friends? Agreed? Okay, so now do keep this concept in your mind. Take a screenshot of my screen right now, and keeping this concept in your mind, let's now move on to the past paper question. Naveed Ali, your question is, sir, why we consider the profit from A in group? I can't understand your question. You need to be more clear. Mohammad Asani, sir, why consider standard cost rather than actual cost in cost model? Just wait. We will move on to that later on. Okay. Now, having discussed the basics of transfer price, let's move towards our presentation and see it represents revenue for the supplying division and cost for the receiving division. And this is the basic concept of transfer pricing. So, uh, time to move towards the past paper question, and let's have a look what we have in the past paper question. Okay, Fatima, what you exactly want me to explain more? Okay, so the rest I'll be covering with the past paper question, so you will get to know what I've done. So, last thing before I move towards the past paper, do remember that what is that particular thing. And that particular thing is that transfer price will affect the individual division's profit, but will not have an impact on the group's profit. So until and unless they are doing business with each other. Okay, unless they are doing business with each other, so it will not have an impact. For example, if I just make a quick change here, for example, if I make selling price here, let's suppose 7. So a selling price of 7 would make seller's profit to be 2. Okay, seller's profit to be 2. And if the selling price becomes 7, so the cost for the buyer will also be what? 7. Okay, okay. So the buyer cost will be 7. Are you getting my point? Because it's a transfer price. So how much profit now the buyer will have? Nothing. A big zero. So this means a change in the transfer price had an impact on the division. Are you getting my point? A change in the transfer price have an impact on the division because revenue for the seller increased, which means cost for the buyer increased. Getting my point? But what impact will this have on the group's profit? Do you think, guys? Come on. What impact will this have on group profit? Tell me. Any impact? Yes or no? I need your answers. Any impact on group profits? People are not replying. So if I consider the group perspective, I know that at group level, these two will be cancelled out and the genuine figures would be considered. Like for example, this 15, 15, this 5, this 5, this 8, this 8. So at group level, there will be no impact on the group's profit. So this means the transfer price has an impact on individual divisions. Okay. But group profit remained same. Okay, so it had an impact on the individual profits, as A is now earning profit of 2, B is earning nothing, but group profits remain unaffected. So do keep this concept in your mind. So as far as both the divisions are doing trading with each other, as far as they are trading with each other, this will have no impact on the group's profit. Guys, it's time to move towards to a passive question. You need to be just relaxed. Let me complete the question and then ask questions if you have. Okay, it's time for practice question, and the question that I have selected for the today's class is a very latest one, and that latest question is portable garage company. It's a very good question. Let's see what we have here in this question. Before I start reading the question, I need the help of my $1,000,000 points, and let's see what $1,000,000 points have right now in its bank. So let's start with the first $1,000,000 point and see what guidance the $1,000,000 points are giving to us. So the guidance is always read the question and identify the current policy and the proposed policy. Okay, what policy here means? Policy means the transfer price policy. So $1,000,000 point is giving us a advice here, and the advice is whenever you start reading the question of transfer price, what we need to do, friends? We need to read the question and identify the current policy that the group is using. I'm talking about the group's current policy and the group's proposed policy. Let's look at the group's current policy. So the portable garage company is a company specializing in the manufacture and sales. Okay. Manufacture and sales of a range of products for motorists. It is split into two divisions, the battery division and the adapter division. Division B sells one product, portable battery chargers for motorists, which can be attached to a company's car own battery and used to start up an engine when the car's own battery fails. Division A sells adapters which are used by customers to charge mobile devices and laptops by attaching them to the car's internal power source. Let's identify who is the seller and who is the buyer. Okay, the following data is available for both the divisions. Divisions B, division A. So let's identify seller and buyer. Come on, just write in the chat box, what do you think? Who is the seller and who is the buyer? Division B. Selling price for each portable battery, including adapter, is 180. Cost per battery includes the adapter cost that comes from division A, which is the transfer price. So you can see the cost is 13, whereas the revenue for A is 13. So this means A is the seller and B is the buyer. Okay, guys. Now, the other cost includes other materials from external suppliers, amounts to 45. Labor cost is 35. Annual fixed overheads 5,460,000. Annual production and sales 150,000. Annual maximum market demand is 180. Okay, so this means they are not fulfilling the current market demand. Strange. Division A, the seller, sells the adapter to B for 13. Selling price per adapter to external customers is $15. Okay, this means division A is selling adapters to division B as well and in the external market as well. Cost includes material 3, labor 4, annual fixed overheads are given to me. Current annual production capacity and sales of adapter, both internal and external, are 350,000. So this is the annual capacity I have. Maximum annual demand is 200,000. So this is the annual demand for the external market. In addition to the materials and labor cost above, in addition means that other than this material and labor, division A incurs a variable cost of $1 per adapter for all adapters it sells externally. Okay, so this is clear. Now, this cost is a cost that will only be incurred in external sales. If you sell in external market, so this is the cost that will be incurred, but not incurred in case of internal sales, because maybe this relates to some kind of a distribution or packaging. Now, $1 million point, friends. Currently, head office purchasing policy allows. So this is the current policy. Yes, $1 million point said this is the current policy. Okay, let's see what the current policy is. Allow B to purchase adapters from Division A, but Division A has refused to sell to Division B any more than the current level of adapters it supplies to it. So how many adapters does A sells to B is a question. So it's very simple right now. By looking at the sales of B, it is clear that 150,000 units 150,000 units are transferred by A to B, 150,000 units, and it has refused that I will not sell any more than that. Okay, the manager of division B is unhappy. He has a special industry contact who he could buy the adapters from exactly the same price charged by division A, that is 13. Okay, if he were given the autonomy to purchase from outside. After discussion with both the divisional managers and to ensure that the managers are not demotivated, head office has now agreed to change the purchasing policy. Now this is the proposed one to buy externally, provided that it optimizes the profits of the group as a whole. So the only thing that I have been given here is the criteria in order to ensure that we maximize the group profits. So we don't have any proposed policy as such in terms of units and the transfer price. The only thing that we have been given in the question is that you have to ensure that the group profits are optimized. You have to make a policy that ensures that the group profits are optimized. Okay, that's great. Let's start first part. Under the current transfer pricing system, it's very clearly mentioned. Current system is what? Current system means that B should buy from A, should buy from A. This is the current policy. Okay, $1 million point did identify that. Prepare a profit statement showing the profit for each of the divisions. So we have to show profits separately here. And for the portable garage company as a whole, this means we have to show the profits for the group as well. So individual as well as group. This means we have to do a similar thing what we did here, right, friends? Yes. We have to show seller profit separately, buyer profit separately, and group profit separately, as I did right now. Let's move on. Back to the question. Your sales and cost figures should split into external sales and interdivisional transfers where appropriate. So you have to try your best to show external and internal sales separately, and this has a weightage of 9 marks. It's now for spreadsheet, my friends. Let's start our solution using spreadsheet and see how we are able to work out the answer using spreadsheet. So the $1 million points did mention, look at the current policy, and we have understood that we know the proposed policy. This is the first $1 million point that you have to follow every time you solve a transfer pricing question. Are you all with me, friends? Yes or no? So let's start with spreadsheet. Now, in spreadsheet, part A is what are we solving right now? Are you guys ready, friends? Let's plan up the things here. Now, what are we supposed to do here in case of this question is that we have to show separate figures. Okay, separate figures is what I have to show here. So let's see how will I be able to do this and show separate figures. Now, first I'm making a column of seller, that is division A, and then buyer, that is division B, and that we have group here, that is the portable garage group is what I have here. Okay, friends. Now, let's start first with revenue. And I did know I need to separate wherever I can. So external revenue separately, internal sales separately. Okay. And then comes the total sales. I love solving questions in spreadsheet because spreadsheet makes your life really easy. Okay, friends. So for seller, we have to follow what? Current policy. What is the current policy? 150,000 units are transferred. How did I knew that? It's very simple. It's very simple because right now they are selling 150. This means 150 is the units that seller is selling to division B. And yes, so 150 is the transferred units. So for division A, internal sales will be up. Use the formulas. The biggest problem of our student is they do not use formulas. They use calculators and input the figures. This is a big sin you are doing in your examination, my friends. You have to use the formulas in your examination. Otherwise, you will not get marks. So what is the price? The price is how much, guys? 13, right? If I'm not wrong. The current transfer price is how much? It's 13. So it's selling price for the seller. Now the external sales. How many units it sells in the external market? So let's see. 200,000 is the demand, and the capacity it has is 350,000. This means if we just look here, it transfers internally how much? It transfers internally 150,000. So it is left with 200,000, which means it can fulfill the entire demand of external market. Agreed, friends? It can fulfill the entire demand of external market of 200,000 because it is selling 150 internally, the rest 200,000 externally. So I'll write it here, 200,000 multiplied by 15 is the formula I've inputted here. And this is the revenue, my friends. Let's use some formula here, bracket open. I'm using sum here, and the total is 4950. This is for division A. Let's complete one division and then move to the other division. So let's start with cost here. The material cost is what I will start with first. Then the then the labor cost, and then I think we have fixed cost as well here, and all set for a profit. So material cost, again you have to use the formula. How many units altogether do we make here, friends? It's complete 350,000 for division A. Come on, say yes or no. Yes. So 350,000 altogether. Material cost is 3 per unit and labor cost is 4 per unit. People are not replying me. Are you all with me? Say yes, we are all with you. So yes, minus sign, use negative sign here because it's a material cost and you have to show this negatively. So it's minus 3 multiplied by 350,000. Again use minus sign, minus 4 multiplied by 350,000. Fixed cost is 2.2 million. So it's the fixed cost, and I am deliberately using minus sign here. Okay, friends, deliberately using minus sign here. So All set for the profit? Let's use the sum formula here again. The sum formula is a magic because if you have used the correct minus signs, it will give you the correct answer. But one thing I need to incorporate here that I'm incorporating right now, and this is something that you may skip in your paper that you have to understand, you cannot. And that is what, that is the extra cost that you incur. What's that? Other cost that you incur for external market only. So how much is that cost? Let's have a look. It's 1 per unit in the question. If you see, it's 1 per unit in the question. And that will be applied to how many units? Entire 3,50,000 or just 200,000? So just 200,000, okay? Minus 1 into 200,000. And yeah, here you go. So we have the profit here of 100,000. And this profit is your profit of division A. This is 100,000. This is external cost only applied to 200,000 units. That's it. That relates to external. Are you all with me, friends? Now let's come towards division B. It's so simple. It's so easy. It's so time saving, seriously. So does division B has any sort of an internal sales? No, it only sells externally. How many units? It sells 1,50,000 units in the external market. And at what price does it sells? It sells for 180. So friends, 1,50,000 multiplied by 180 is the revenue that I'm getting here. Okay. And I don't have any other internal sales for division B. So this will be my final revenue for division B, if I'm not wrong. Now coming towards the cost. How did you find material cost? Which material cost, Timwa? Which material cost you are talking about? If you're talking about this material cost, so it's very clearly given 3 here. And if you're talking about the material cost, which is addition 1, so you can see it is written in the paragraph 1 cost for the adapters that relates to the outside market. Okay, Timwa? Okay. So now what's next? The cost for buyer. So let's see what the cost of buyer is. We have the other material cost. Yeah, this is the other material cost that I'll be using here. Labor cost, yes. And one more, that is the adapter cost. 3 costs is what I need to consider in case of variable, and then the fixed cost. Okay, so let's start with the first one. Internal purchase. Now friends, what I need to do, it's the same figure or not? Yes, it's the same figure, but show this negatively here. It's a cost for B, minus 13 multiplied by 1,50,000 units, and it's same figure 1950. Let me highlight this way for you people so you can see this very clearly. This is the transfer price. This is the transfer price. Okay. Hassam, you are saying why adapter cost? I can't understand your question. If you're talking about this $1 cost, so it's written in the question, my friends. You need to thoroughly read the question, okay? If you're talking about this figure, I did mention twice about this figure. So this is the internal purchase. Now comes the other material. So it is selling 1,50,000 and the other material cost is 45 and labor is 35. So it's 45 multiplied by 1,50,000. And here it's 35 multiplied by 1,50,000. Are you seeing, everyone? So this is clear. Okay. Now we have a question of Muhammad Yasin. Muhammad Yasin, it's very simple, my friend. 1,50,000 units is what we'll sell in the market, and we'll sell for 180. That is written in the question. Okay. So it makes 27 million here. Okay. So I hope this is clear to you as well, Muhammad Yasin. I'm trying to take up your questions here. No need to put dollar signs in front of everyone. No need to put, okay? No need to put. I'll tell you a very good shortcut using your examination platform. Fixed cost. Do we have here fixed cost? Yes, it's 5460. 5460. And yes. So are we done with all these figures, guys? Yeah, I think we are done, but I just need to check the fixed cost. So the fixed cost is 5460, definitely. So we are done with all the figures here and all set to work out our profit. So just use the same formula, just copy paste it and just, yeah. Okay, we have a question here from one of our friends, Hassam Akram says it is necessary to use minus sign. My friend, it's not, but you should use it. You need to deduct this, and plus I'm using the sum function here. So for sum function you have to you have to show you have to show the what you say you have to show the negative sign, because if you need to use the sum function, so for that it is really important for you to ensure that you put negative signs, otherwise sum function will not work. And this is very good option, sum function, so that's why it's good to input this. I hope we are done with this profit as well. It's all now set to work out the group's profit. Come on, what will be cancelled out with at time of group? What we need to cancel out at the time of group? So let me just quickly write here on the spreadsheet. These two would be cancelled out. Wow, what a use of technology, right? So these will be cancelled out. Other than these, everything will come. Other than these, everything will come. So it's very simple. Now let's use the sum formula. We are done. In few minutes we will be at the answer. Control C, copy, Control V, paste. You can see. So you have these figures here. I'm just adding everything together. You can see minus minus would get plus. I did put minus sign for labor, my friend. I did put. Okay, again, just copy paste these two. Magic. Spreadsheet is showing its magic. Okay. And here you go, friends. We are almost there. To work out the profit is equals to, let's use the sum formula. And this is the profit that I've worked out in front of you people. I hope my calculation is clear to all of you. No, we don't have option of insert row and column directly in examination. My friend, this is something I can do in spreadsheet. You can use highlight things there. Okay. It's nothing unclear about the group. It's the most simple thing that is the group revenue. What I've done, the two external sales that I've added, that's it. Dilij Kumar, it's simple, my friend. So the things that have been crossed here, are not considered in the group's profit. The rest all I've considered in the group's profit. And I hope this is clear to all of you. Now, what's your feedback for part A? Is part A clear to all of you? Come on, tell me, guys. Is this easy or difficult? Bikesh Bohara. Sir, please explain my question. What your question is? Total will be 400,000. At the other cost, division cost would be, I have shown you the figures. You can see the figures. If you need to still see, I'm opening the cells. Bikesh, this is for you. Bikash, this is for you. That I'm opening the cells and you can see the figures. Okay. Okay, Bikash. Now, do you want this formula answer? Do you want this formula based answer on your WhatsApp group so that you can check the formulas? Come on, tell me yes or no. Do you want to see the formulas again at home? So I will WhatsApp you this sheet. So that's why join the WhatsApp group today. If you can't join the group through link, then note my number +922436 Just WhatsApp me here. Sorry, a bit change I need to make. 923212436266. I'll send you this sheet with the formula so that you can later on watch this. Okay, so I'll send you the sheet as well. So just WhatsApp me at this number. Now, are we clear about this, everyone? So let's move towards the next part. I'll be ready for the next part. It's the F2 button on Excel that you can see the formulas as I'm showing you here. It's the F2 button, but in examination, you need to double click. In examination, you need to double click to open the cell to watch the formulas. Okay. So my friends, I hope I have covered this in the right way. This is part A, and I'll save this for you people and will WhatsApp you the entire sheet for the formula checking so that you can watch the formulas. So Naveed Ali, you can see the formulas later on. I-20 is what you asked me to show. So I-20 is very simple. See, Naveed, other cost, which is only for division A and nothing for division B. It's a genuine cost. Okay. Let's move on. Now I'm moving towards the next part, and that next part is really important, and see what is being asked here. Assuming that the new group purchasing policy will ensure the optimization of group profits. Okay. Assuming that the new group purchasing policy will ensure the optimization of group profits, calculate and discuss the number of adapters which B should buy from A and the number of adapters which A should sell to external customers. Okay, now listen, guys. In every theory question, remember you need to find out two things: examinable verb and examinable object. What you need to find out, friends? Verb and object. Verb is what? Discuss, illustrate, justify, briefly explain. These are verbs. And what are objects? Object is the core thing that you have to answer. Object is that main thing that you have to answer. So every question that you read, just break the question into parts. Just find out the verb separately. Just find out your object separately. Because if you learn this art, my friends, you will become a champion to understand the question requirements. The best way to understand the question requirement is to break the question into verbs and objects. Let's now look at the verbs. Assuming that the new group purchasing policy will optimize the group profits. Now, this means the policy has changed. Okay. You are given the luxury to change the policy and what the new policy is. So let's see here. Head office has now agreed to change purchasing policy to allow B to buy externally, provided that it optimizes the profits of group as a whole. This means you now have to keep this in your mind, that the group policy is now that they can buy externally. B has the luxury to buy externally. So this is a change in the group policy, but make sure this results in optimization of group profits. Okay. Calculate and discuss. Now this is the verb. This is verb number 1. Calculate and discuss. This is verb number 2. What to calculate and what to discuss. So that what is object. Let's see what to discuss and calculate. The number of adapters. Now this number of adapter is what? This is the object. This is the object. Number of adapters which B should buy from A, and the number of adapters which A should sell to external customers. So if I just quickly make this simple, I need to calculate and discuss what? Number of adapters. Number of adapters I need to calculate and discuss that B buys from A and A sells to external market. Yes. Now friends listen. This is the interesting part coming up. This is a magic that I'm doing right now in front of you, and I'll justify my magic. Please just put your headphones near and just concentrate. Stop talking at your home and just listen what I'm saying. This is the most interesting part coming up. I will make transfer price really easy for you. I will make transfer price in your fingertips. Okay, so be with me. So now the word that I've seen here is optimization of group profits. Now remember, whenever you are required to optimize the group profits, you have to use one thing, and that is what? General rule. Yes, I repeat, if you have to optimize the group profits, so you have to use what? General rule. What is a general rule? So let's move back to see what is the general rule. So friends, it says that if policy is to maximize group profits, as it is, use general rule. Use what? General rule. Let's see what the rule is. This is the general rule. This is theoretical transfer price rule, which is marginal cost plus opportunity cost. You know what is marginal cost? It's the variable cost. You know what is opportunity cost? Loss of contribution if not sold externally. I will make your life easier. You need to be with me for transfer pricing here. I'm telling you magical tips today. Loss of contribution if not sold externally. This is opportunity cost. This is general rule. So when the question states that we have to optimize the group profits, use general rule, and this rule is marginal cost plus opportunity cost. Okay, what do you have to tell here? What do you have to tell here? So let's see what we are required to tell here. We need to tell the number of adapters that B and A will transfer within the division, and we need to ensure what? We need to ensure what? We need to ensure what? We need to ensure group profits maximization. So whenever you are required to use general rule, my friends, what are we supposed to do? In case of general rule, what are we supposed to do? Let's have a look. What are we supposed to do? So first of all, we need to see what? First of all, what we'll see? First of all, we will consider the seller's perspective, because who will quote the price? It's the seller. So first we have to consider the seller's perspective. Okay. Now the first thing is seller's perspective to identify minimum transfer price. So what's the seller's perspective? Now, what seller will look at first? Let's look the total capacity of the seller. What is the total capacity of the seller? The total capacity of the seller is how much? It's 350,000, right? It's 350,000. Okay. How much is the external demand? Okay. Let's figure out first thing. External demand. External demand is 200,000. Okay. How much is left or spare capacity, I would say? Spare for the seller. It's 1,50,000. Are you all with me, guys? It's 1,50,000. Okay. Now, the first thing that we have to keep in mind in general rule is we need to identify the minimum transfer price, and that will come from the seller's perspective. So whenever you are required to use general rules, so remember the first thing is that we need to understand the minimum transfer price from seller's perspective. Now, keeping this in mind, we know the spare capacity here, and the spare capacity is how much? 1,50,000. Now, how much is the internal demand? The question is, how much is the internal demand? Remember, now the group policy has changed. Okay, the group policy now has changed, and keeping the new group policy in mind, you need to ensure that for how much price the A will sell to B. Now, do you think B has the luxury to buy from outside? Say yes or no. Do you think B has the luxury to buy from outside? Say yes or no. Yes, you are clear that B has the luxury to buy from outside, right? So what B would be thinking is that let's fulfill our complete demand. B would be thinking, let's fulfill our complete demand. Okay, so B would want to fulfill the complete 180,000 demand, and this is I need to work out what will be the best units that will be transferred. So let's keep this in mind. Let's keep this in mind. If A wants to fulfill B demand of 180,000, so how will A fulfill? First of all, A would see, okay, I can transfer 150 easily from my spare capacity. From my spare capacity, I can transfer 150,000 units without any hesitation. Okay, guys, are you ready with me? It is clear? Now would think, what about the remaining? From where will I bring the remaining units? Come on, can you tell me from where can A bring the remaining units? So A would say, okay, I have only one option, that is I shift from external market. I shift from external market. How many units? 30,000. I will shift from external market 30,000 units. So this is how, friends, are you with me? This is how you can fulfill the 180,000 demand of internal division. Now, the decision will not be based on quantity only. It will be based on price. It will be based on price. So let's see the price. What we have to use here? General rule. Why we have to use here? Because group profits are to be maximized. So let's use general rule. Let's apply general rule first to these 30,000 units. Transfer price is equals to what? Marginal cost plus opportunity cost. So what is the marginal cost? If it sells internally, what is the marginal cost? Quickly, let's have a look. 3 plus 4. I'll not consider here 1, okay? Because internal selling doesn't result in this one cost. So 3 plus 4 makes how much? 7. 7 is the marginal cost. Okay, let me quickly tell you, Muhammad Nayab. Nayab, 180 is the total demand to fulfill. 150 you can cover from spare capacity. 30 you need to shift from external market. This is how you can uh, complete the 180,000 demand for the internal division. Okay, Nayab. Now, what is the opportunity cost? If you shift from outside, the group policy has changed. Okay, keep this in your mind. The group policy has changed because Muhammad Yasin, that one relates to external shift of the units. If you sell internally, one will not arise. And right now I am shifting the external units internally, so one will not arise. Now, what is the opportunity cost? It's simple. What is the external selling price? External selling price is how much? 15. Yes. How much is the marginal cost externally? 3 plus 4 plus 1. Because when you sell externally, one will come here. One will come here, as the question stated here. One will come here. So if you sell externally, one will come, and altogether this becomes 8. So what is the contribution per unit of 7? If you sell externally, you will earn 7. Are you with me, guys? If you sell externally, you will earn 7. But if you do not sell externally, this will be loss of contribution per unit. So if you shift 30,000 units from external market towards internal market, if you shift 30,000 units from external market towards internal market to fulfill 180,000 internal demand, you will be compromising on $7 opportunity cost. So this is the $7 opportunity cost, and the price becomes what? 14. I'll tell you a very good shortcut in 3 to 4 minutes time. Be with me. I'll tell you a really good shortcut for this part as well, and will cut short your workings, and you will love the shortcut. Do give me your feedbacks, but do understand what I'm doing right now. So this is the contribution that you will earn if you sell externally. But if you don't sell externally, you are losing this 8, and you are losing this 7, and this 7 will become your opportunity cost. General rule. So you have decided that if 30,000 units will be transferred to the buyer, the price would be 14. This 14 is the minimum price. Minimum price for the seller. Minimum price for the seller. Okay, Sanjay Kumar, my friend, you need to concentrate, my friend. This one I have taken here just because to work out the contribution from external market. So if the contribution is of external market, so this one will be considered here. Now let's apply the same rule to finalize this on 150,000 units. What will be the marginal cost for internal transfer? 7. 3 plus 4. 7. 3 plus 4. Okay. Any opportunity cost, friends? Any opportunity cost? Come on, tell me, management accountants. Any opportunity cost here? 0. So what is the transfer price? 7. and this is the minimum that the seller wants to charge for 150,000 units. So you can see in front of the screen, we have two transfer prices here. For 150,000, the minimum is 7, and for 30,000 units, the minimum is 14. There are two minimum transfer prices, one for 30,000, one for 150,000. Agreed? Okay. Before I close my discussion here, listen, before I close my discussion, this is general rule what I'm using here. This is general rule. Both are called minimum. Yes, both are called minimum. So this is my general rule here, and I'll just cut short the general rule in 2 minutes for you people. Okay. So do you want me to cut short the rule? Come on, tell me. Do you want me to cut short the rule and make it simple? Come on, I just need to say how many yes comes. On the basis of yes, I will decide. On the basis of yes, I will decide. The more the yes, then I'll do it. Do you want me to cut short all of these things? So many yes, more yes, more yes. Come on, yes, more yes. Everybody, everybody. Yes, so let's time to do it. Let's cut short all these workings and just close this into few things. Do give me your feedbacks. Let's go to the $1,000,000 point. Come on, $1,000,000 point. Can you help us here? So let's see what $1,000,000 point will say. Use general rule. First thing, what you need to do, find minimum transfer price from seller's perspective. This is what we have started with. Now, two things you have to check in the question. If seller has no spare capacity, if seller has no spare capacity, so how many units we found out here? 30,000 units were not spare. Remember, 30,000 units the seller was transferring from external to internal. Agreed? So 30,000 units were not spare. So what is the transfer price? It's very simple. External selling price 15 minus internal saving 1, and this makes what? 14. See, it's 14. It's the same figure that I've worked out. It's the same figure that I've worked out. So simple. You can work out in minutes. So how can you work out this? See, instead of doing this calculation, instead of doing this calculation, you can reach to the same conclusion. How? Are these 30,000 units spare? So not spare capacity. So how can you reach to the same figure? It's simple. External selling price is how much? 15. Okay, 15 minus internal saving. What is the saving? It's simple. If you sell it within the division, this one will not arise. This one will not arise. Okay, this one will not arise. So from this 15, if you deduct this internal saving, so you will reach to the same figure of 14 that you have seen here. So you can see I have reached to this minimum in a shortcut way without any problems. It's so simple. You need to remember whenever you need to work out the minimum transfer price, and if there is no spare capacity, so what shortcut can you do? Just find out the external selling price and just deduct the internal saving of 1. Ali Hassan, because 1 will not arise if you sell internally. 1 will not arise, Ali Hassan, if you sell internally. Fatma, are you getting my point? Guys, are you seeing this shortcut? I have worked out the same figure because this is a short method. It is based on general rule, okay? It is based on general rule. So what shortcut I can use? If you see any units that are not spare for you, so what you could have done? You could have used the shortcut, and that is external selling price minus 1 the saving, and you would have reached to the same 14. Temwa, your question is what if there is no cost saving? So then you don't have to deduct anything. Tessini, if no cost saving, then you don't have to deduct anything. Then 15 would be your transfer price. So you can use this shortcut, and you don't have to then use this long method, because you will reach at the same point. Either you work like this, either you work like this, you reach at the same point. So let's save our time. Okay, friends? Is the shortcut clear to all of you? Come on, tell me. Did you like the shortcut? Is it easy? How I've cut short the workings? People are not replying. So yes, if there is no spare capacity, then simply what you can do, external selling price minus the cost saving, and that's it. Okay, now let's go back to the rule and see if seller has a spare capacity. So how many units you had spare here? You had 150,000 units spare in the question. If seller has spare capacity, then what is the transfer price? Marginal cost of internal transfer. Marginal cost. It would be a low cost. Obviously, manager would want to sell for more, but this would be the minimum. This would be the minimum. Okay. So what I've done here, let's have a look here. If there is no spare capacity, so in our solution, these 150,000 units are a one where there was no spare capacity. No spare capacity. So what is the transfer price? It's marginal cost only. Marginal cost only. This is the minimum one. I'm sure the seller would want to sell for more than this, but this is the minimum 7. So the rules are clear. Rules are clear. We have reached to the same thing directly without using the general rule formula. The shortcuts that I've made for you people are based on general rule. If you want to use general rule, that would take a bit more time. If you want to learn the easier methods, if you want to learn the shortcut, so it's very simple. If you want to learn the shortcut, it's very simple. What is the shortcut? Let's quickly have a look again. This is the $1,000,000 thing. Just find out the units that are spare for the seller. Just find out the units that are spare for the seller. So for units that are spare for the seller, what we have to use? We have to use marginal cost only. Are you getting my point? Just found out the units that are not spare for the seller, like 30,000 here were not spare. So for those, the selling transfer price would be external selling price minus internal cost saving, if any, and you will get the same thing. Friends, what's your feedback? Nayab, because $1 is a cost that will not be incurred in internal transfer. I'm repeating again and again, that relates to external sales only. Okay, Nayab? Internal marginal cost of selling internally is not 8, it's 7, because internally 1 will not arise. Okay, Fatma? Isa, I never said this is a maximum transfer price. You are not listening me. Yes, it will help you to score the same marks. Okay, now guys, I think we are done, and I had made this very much clear. So let's quickly recap. Listen, let's quickly recap. If profit are to be maximized, you have to use general rule. If we have to use general rule, then we need to find out the minimum transfer price from seller perspective. How to find out? Rather than applying the general rule, the best is use the shortcut. What is the shortcut? Find out if seller has no spare capacity. So find the units that are not spare, that seller can sell externally. Find those units. So for those units that are not spare, you can easily work out the transfer price, external selling price minus savings. If there are savings, if there are no savings, doesn't matter. This would be the minimum 14. Okay. If the seller has a spare capacity, so the transfer price would be marginal cost only, internal cost, that is 7, which is 3 plus 4, and this will be the minimum transfer price for the seller. So through the shortcuts you can easily figure out. Okay, and I have even given you the idea of the long method as well. So through long method, now you know how to do this. I've applied the rule, and I've even told you the shortcut as well. Shortcut will save your time. Long method will take more time, because when the questions are of low marks or less marks, then use the shortcut that I've told you here. Otherwise, you have the long method, as you can see, which is the general rule. The last thing before I move towards the next point is the general rule is used in the shortcuts. The shortcut that I told you right now is made using general rule. So it results in the same thing. Okay, it results in the same thing. I think let's move on. Now the prices have been cleared. So what the prices for A are? 150,000 units, A will sell at minimum 7, and for 30,000 units, a minimum of 14. Okay, now let's look at the second point, and that is find maximum transfer price buyer's perspective. Before taking the decision, find maximum transfer price buyer's perspective. So let's see what's the buyer's perspective. So the buyer's perspective is what? Now just see what buyer would say. Buyer can purchase this from external market at what price? Can you tell me please? At which price buyer can buy from external market? Yes, it says buyer can buy from external market for how much? For 13. 13, the same price. Okay, 13. 13. Okay, so let's do this. Now buyer can buy from outside for 13. So we are clear on this. 13. Let's move on. Now tell me what buyer would do. Buyer would prefer buying these 30,000 at 14. Come on, say yes or no. No. Buyer would say no. Thank you very much. Keep it yourself. Keep with yourself. I don't want your units. Buyer would not want to buy this. Okay, what about this 150,000? Yes. Buyer would want to buy this for one. Buyer would want to buy these 150,000 only. Okay, so now what is the maximum buyer can pay? So what will be the maximum that buyer can pay? Let's go to the $1,000,000 points. It says transfer price is equals to price that buyer will have to pay if bought externally. And how much is that? 13. 13. Yes. Okay. So for these, the maximum would be 13. Maximum would be 13. So for seller, the minimum is 7 for these 150. And for buyer, this maximum would be 13. So have we got the answer? Do we have the answer now? So yes, we have the answer. The question required us to find out the units that buyer would buy from A. Let's see the question again. What I was required to answer here. Okay, the number of adapters B should buy from A and A should sell to external market. Are we clear about the answer? So buyer will not want to buy this 30,000 for 14, okay, because the price is maximum buyer can pay is 13 only. For both maximum buyer can pay is 13 only, okay. So what is the decision now? Buyer will not buy this 30,000 internally, agreed. So the answer is what? Answer is internal transfer. Internal transfer will be of how many units, friends? Internal transfer will be of 150,000 units. Okay, of 150,000 units. So B would want 150,000 units for a May maximum. And how many units A will sell externally? This was required, right? A will sell externally how many units? So A will sell, if 150 A is selling internally, so how much can A sell externally? So out of the 150,000 capacity, 150 internally it will sell. So externally it will sell 200,000 units altogether. Okay, 200,000 units. I hope this is clear to all of you. Now we have figured out the maximum for the buyer, and the answer is clear. Internal transfer will be 150,000 units. That is B and A, and A will sell 200,000 externally. This is what was required. So let's have a look at the question here. Question required you to tell this. So the answer is 150 and 200. Number of adapters. Now you have to discuss this in a paragraph form. You have to discuss this in a paragraph form. So the calculation that I have just shown you here is what you have to discuss in a paragraph form. Okay. This entire working that I've done here, you have to show in a paragraph form. So I will send you the drafted answer. I will send you the drafted answer of this part to show how the drafting will be done. But the final answers have been worked out, and those are 150,000 internal transfer, 200,000 externally. A will transfer to B, sorry, in the external market, and the shortcuts should be very much clear. Now remember, if you need to solve a question in a quicker way, maybe an MCQ or something like that, so let me give you a quick guideline what you are supposed to do for a decision. So listen what I'm saying. Whenever you start with a question, firstly just look what the current policy is, then look at the proposed policy. If the policy is to maximize group profits, you have to use general rule. Clear? General rule. So what general rule is? Find minimum transfer price from seller's perspective. So for that, what you have to do, you quickly check. Either you solve general rule long method the way I have done, okay, the way I have done, or you can do what? You find out the seller's capacity. If there is any spare capacity, so the units that are spare, for the units that are spared, the transfer price would be marginal cost for internal transfer only, internal transfer only. Okay. And if there are units for which there is no spare capacity, then the transfer price would be external selling price minus internal cost savings, if there any. So that would be the transfer price, and these two will be minimum for the seller. Now once you have found out the minimum for the seller, look what buyer would be thinking. So from buyer's perspective, find out the maximum transfer price, and that is what the buyer is willing to pay in the external market. So after that, take the final decision, and whatever decision you take will be good for the group. So here the decision was 150,000 units will be transferred internally, and between A and B, and A will sell 200,000 externally, because this is best for the group, as I just showed you that this is best for the group and best for both the divisions. So I hope this is clear to all of you through my calculation, and you have to draft the answer. So I'll send you the drafted answer tomorrow through the WhatsApp group. Yes, marks will be same. Okay, marks will be same. Friends, did you like the technique? What's your feedback? Tell me yes or no. Did you like the technique? The shortcut? Come on. What's your reply? Did you like the shortcut? More people are not replying. Okay. So do watch the video again and just have a look at the general rule and then the shortcut. You will really find this easy. I hope this is clear. Let's quickly move towards the next part to wind up this question and this area as well. So quickly I'm moving towards the next part. Let's see what it says. Assume that no come on, I need quick answer from you people here. Assume that no external supplier exists for the adapters which division B uses. Okay, no external supplier exists, which means B cannot buy from outside. B cannot buy from outside. Calculate and discuss what minimum transfer price would be for any additional adapter. Come on, tell me the answer. Let's see how many people answer me quickly, because I've done the entire working. Calculate and discuss what minimum transfer price would be for any additional adapters. Additional adapters means what? Supplied above the current level by A. So currently A sells how many? 150. Remember, currently A sells how many? 150. And those 150 for A are spare, right? Right? So if additional adapters it sells, so how many is additional that B will require? So the additional that B will require is how many? It's 30,000. Okay, to fulfill 180 demand, 30,000 more, 30,000 more. So if A sells 30,000 more, 30,000 more to B, what is the minimum transfer price that the A will charge? Minimum. So we know the minimum one. What is the minimum? Come on, guys. What is the minimum for these 30,000? For these 30,000, are these, come on, let's do the magic. Let's do the magic of shortcut. Tell me, are these 30,000, are these 30,000 spare or not spare? Spare or not spare? Come on, spare or not spare? For seller, are these spare or not spare? These 30,000 are not spare. For A, these are not spare. If they are not spare, then what shortcut we have? External selling price of 15 minus the shortcut. What is the shortcut? Minus internal cost. How much is the internal cost? 1. So what is the minimum transfer price? It's 14. See how quickly I've done that. How quickly I've used the shortcut here. Understood, guys? How quickly I've done the use the shortcut. Spare means the total capacity of the seller was 3,50,000, Fatma. Okay. 150 it is already selling. So 200,000 it was left with. And the external demand was 200,000. Okay. Okay. So now to sell this additional, it needs to transfer 30,000 from the external market. It's the same thing. So the minimum transfer price in that case would be what? These 30,000 are not spare, okay? So it would be 14. Now what you need to discuss? This is all you need to discuss. This is all you need to discuss in a paragraph form. This is all you need to discuss in a paragraph form. Sanjay, getting my point? What you will write? Listen, I'm telling you the drafted figure. I'm telling you the drafted answers. Listen, everyone. You will write. You will start like this. Seller total capacity is 350,000. Seller has an external demand of 200,000 and has a spare capacity of 150,000. That seller is already selling. Now to sell additional 30,000, seller needs to shift from the external demand because these 30,000 are not spare. Are you listening, Sanjay? For these 30,000 which are not spare, the transfer price would be what? The transfer price would be, you can show in the bracket, would be 15 minus 1, and that is 14 would be the minimum transfer price that the seller would want to charge to buyer, because seller can sell this product for 15 in the market, and if it transfers internally it gets a $1 saving. So for seller it would become 14 if it deducts $1. Okay guys, this is what you have to draft. So I hope this is clear to all of you now. Fatma, I'm again and again saying that total units for seller is 350,000. 150 is the spare. You can see here the calculation I did here. So I hope this is clear. See, I've done the working in front of you. Total capacity, external demand, 150 spare. So see, it's the same thing. 30,000 units are not spare. Okay, Fatma? 30,000 are not spare. And these are the additional units. Okay, guys. So did you like the technique here? The shortcut to find out minimum and maximum transfer price. Did you like the shortcut to find out minimum maximum transfer price? People are not replying me. Is the $1,000,000 point worth it? Yes, friends. Is the $1,000,000 points worth it? Okay. So yes, thank you very much, guys. Now you have to watch previous webinar videos for further transfer pricing clarity of general rule. I will share, watch which videos you have to see. I'm giving you a complete plan every day. You just follow my day wise plan. so that your knowledge gets complete. Now you have to watch, after this question, you have to watch another question from previous webinars. I will share the link of that. So it will give you a complete understanding of the entire transfer pricing. Okay, but you have to watch that. Let's take a 5-minute break here. In the break time, you can WhatsApp me at 923212436266. If you haven't joined the group, just send me a text message. I'll share the link. Otherwise, you can join yourself through the link. Mohammad Yasin, at the end of the class, I will share with you the video that you have to watch for transfer pricing and the question that you have to solve. Let's take a break. Let's enjoy the break now. See you after 5 minutes. Okay, friends, we are back. I hope this is all clear. Now, let me quickly tell you uh, that what you have to do. I'll send you the drafted answer. As I mentioned, I will send you the drafted answer of these two parts. Along with that, for all these discussion, you have to watch the video, and I will share the link of that at the end of the session. Okay. Now I'm moving towards a very important thing that I need to just quickly tell you people. Listen, these are $1 million categories, $1 million categories that are coming in front of you right now. So just follow the $1 million categories. I'm just telling you very quickly before I move toward decision making. Uh, in financial, non-financial area, I have divided the questions into three areas. There are three categories that you have to keep in your mind whenever in a paper. If you see the financial, non-financial question, so remember that $1 million categories are in front of you. Just try to identify which category is being asked in the exam. So first is theoretical explanation of the model. Yesterday we saw this question in Jamir, part A, which says describe each of the four perspective balance scorecard for 6 marks. So this was the first category, and this is very frequently tested in the paper. So whenever you are asked in the paper about the general explanation of the model, remember this is category one. This is what I have introduced. First time I've introduced these categories. You haven't seen these categories in your book anywhere else. These are $1 million categories that will make your life really easy in your examinations. So friends, whenever you see a performance measurement question of financial and non-financial in the paper, just relate that question with these categories, and then you will get to know what you have to do. Okay, so this type of a question is simple, a discussion question where you have to use your bookish knowledge. It's the same we found in One Stop Car Company part B, which required to explain how standards and rewards support the dimension block. So this was also a simple uh, question where you were required to discuss your knowledge. Okay, the other type of question that can come in your paper is assess the performance of the business either with a model like building block model, like balance scorecard, or without a model. So yesterday we did a question that was best night question, and that was without a model. If you remember, we did assess the financial performance and the non-financial performance of the company, and this is the performance that you have to check. And in this type of a question, you need to calculate the ratios. You can work out financial ratios, you can work out non-financial ratios, and on the basis of these ratios you assess the performance of the business. So this was the part that we did yesterday, and this is a very common question that comes in PM. So you are required to assess the performance of the business financially and non-financially, and this you can do through a model like building block model or balance scorecard, or you can do without a model. So this is the most common type of a question that comes in your paper. Okay, then we did another third type of a question. This is category 3 question, which I ask you to identify goals and KPIs, and this you would be required to do with a model. Either balance scorecard or building block model would come in your paper, and this was a question that we did yesterday of Jamir company, if you remember, where we were required to identify one goal and the performance measured for the company, and we need to justify that. Okay, so these are three categories of question that can come in your paper. Remember, these are $1 million categories. You will never find these categories in any sort of a book. So just keep in your mind that these categories can make your financial, non-financial questions really easy. Number one, if you're required, come on, tell me what do you understood about the categories. Come on, just write it. If you are required to explain the general model, so this is which category? Come on, write. This is which category? People are not writing. This is which category? This is category one. This is category one. Okay. Now, if you are required to assess the performance of the company, through model or without model. So what category is this one? Come on, tell me which category is this one? This is category. Come on, guys. This is category 2. And in this category, you have to write you have to find out the ratios, financial ratios, non-financial ratios, as we did yesterday. Now, if the question requires you to find out the performance measures, to identify the performance measures, and you are not required to do the calculation, so that is which category? Category 3. Category 3 is what you have to follow. So guys, these are $1 million categories for performance measurement questions, for financial, non-financial questions. Do keep this in your mind. These can make your life easier. Through these, you can easily figure out what the question is asking for, whether it's category 1. So just explain the model. If it is category 2, do the calculations and then assess the performance. If it is category 3, just identify the KPIs or the goals, as we did in Jamia company. Okay, so $1 million categories are clear. Now it's time to move towards next section, and that is decision making. I hope I have spent a lot of time on performance measurement, because this is the most difficult area for all the students. So that's why I spent lot of things. I've discussed lot of things on performance measurement. We have discussed financial, non-financial. We discussed balance scorecard. We discussed built-in block model. We discussed transfer pricing. So these are all key areas that you have to cover. I hope you are all happy and things are clear. So did you like the $1 million techniques? Yes, guys, did you like the $1 million techniques? Yes. Did you like the $1 million techniques, everyone? Are you all with me? People are not replying. Hello, can you hear me? So are the $1 million categories for financial, non-financial clear? Okay. So now we are moving towards relevant costing. Now, what is relevant costing? Decision making core area, relevant costing. Remember, last time in webinar I covered one-off contracts. So today I will give the link of that video and you will cover one-off contract through previous webinar. Today I am focusing on shutdown decisions. Shutdown decisions, okay? So remember, a cost is relevant when? A cost is relevant when the cost is incremental cost or an incremental revenue. So whenever the cost arises because of a decision, it is an incremental cost. Or any income that arises because of a decision is an incremental income. Second, what is opportunity cost? Cost of second best alternative. Cost of second best alternative. You all know that. So remember, according to relevant costing, a cost will only be classified as a relevant cost if that cost is an incremental cost or it is an opportunity cost. If it is an incremental cost or it is an opportunity cost, in that case it would be classified as an relevant cost. Okay, when the cost is irrelevant, when the cost is irrelevant for a decision, when it is a past cost, which means it is a sunk cost, already had been incurred. When it is a committed cost, when it is a committed cost, which means commitment has been done in past. Commitment had been done in past. For example, you can say guaranteed minimum wage of the labor. Guaranteed minimum wage of the labor is a committed cost. even though you haven't paid that cost, but you have made the commitment to pay. So that is a committed cost. Committed cost is the one that you will incur in future, but the commitment to incur has been made in past. Whereas sunk cost is a cost that has already been incurred. What is notional cost? Artificial cost, imaginary cost. So notional is an artificial cost, imaginary cost, and this is not a relevant cost. Okay, like we work out overhead absorption rates, OARs. We absorb on the basis of OARs. So those all are notional cost. Then reapportionment of existing fixed cost. Now, if you already have a fixed cost and you are just reapportioning that cost to the option that you are assessing, so that is not a relevant cost. So any reapportionment of existing fixed cost, now it is existing means the cost already existed, so it's not a relevant cost. So friends, this is $1 million rule, which is rule of six. Rule of six. So you need to keep this in mind. Rule of six. Rule of six is a one through which you will decide whether a cost is relevant or a cost is irrelevant. Rule of six. Okay. And I'll just show you right now how will I use this rule of six for you people. Great. In last session, I covered one-off contract. This time it's shut down that I will be covering through rule of six. So let's start with shutdown decisions and let's move towards another past paper question. Okay. So guys, we are starting with shutdown decision, and rule of six is clear. A cost is relevant when it is incremental or it is a opportunity cost. I'll make this easy for you, Asia, don't worry. A cost is irrelevant when it is a sunk cost, it's a committed cost, it's an imaginary cost, like absorbed overheads, or it's just a reapportionment of existing fixed costs that will arise in any way. So let's start with this very good question. Stay clean. So we should stay clean, right? We should stay clean. It's a shutdown decision. Let's read the requirement first. Calculate whether or not. See, I'm telling you the $1 million point. So be with me. Calculate whether or not it is worthwhile ceasing to produce TD now, or rather wait for 12 months. Now, there is a product TD. So the decision that you have to take is whether we have to close TD now or we should wait for 12 months. We should close TD now or we should wait 12 months. Okay. So it's a shutdown decision. Should we shut down it now or we should not shut down this for 12 months? Now, do you trust me? Say yes or no. Do you guys trust me? Nobody's replying. You don't trust me. Okay. Oh, Hassam Akram says no. Okay, if you trust me, then follow my $1 million points. And what are those? Let's have a look. Think of shutdown. While doing the calculations, think of shutdown. So when you are doing the calculation, think of shutdown. Okay, this is not the decision that I'm taking. I will just think in my mind if you are given with two options, to close it now or not to close it now. To close it now or not to close it now. Come on. According to my $1 million point, what will you think? What will you think? Close it now or not close it now? Come on, tell me by writing here. You will think of a shutdown. Just think of a shutdown. This is not your decision, okay? For final decision, use net benefit, net cost of shutdown. But for final decision making, we will look at the net benefit or net cost of shutdown. Are you with me? Now, it's an obvious thing. If it results in net cost of a shutdown, if there is a cost of a shutdown, what will you do? You will not close. You will not close, okay? Because there is a cost on shutdown. But if there is a benefit on shutdown, if there is a benefit of shutdown, what you will do? You will close it. Simple. You will close it. So if it's a cost of shutdown, don't close it. If it's a benefit on shutdown, close it. What your mindset should be while doing the calculation? The mindset should be that we will go for shutdown. Are the $1 million points clear? Friends, say yes. Let's move to the question. Okay. Now, let's do the calculation. What my thinking is? My thinking is I'll close. So let's work out relevant cost for closure. We will follow relevant costing principles. And those principles are what? Rule of six. Rule of six. So our thinking is we'll close it. Let's read the question one by one and we'll solve. One by one and we'll solve. Okay. So be with me. This will give you a lot of confidence and will make your concepts clear, and the marking scheme I will share at the end. Stay Clean manufactures and sells small range of kitchen equipment. Okay. Specifically, the product range contains a dishwasher, a washing machine, and a tumble dryer. The TD is of rather old design and has for some time generated negative contribution. Oh man. If a product generates a negative contribution, you know what negative contribution is, friends? You would say close it right now, close it. So listen guys, don't be hyper. Follow the relevant costing principles. See TD, negative contribution of 10. Still, don't be hyper. It is widely expected that in 1 year's time, the market for this design of TD will cease. Okay, this is strange. In 1 year's time, the market of TD will cease. It says that after 1 year, the cease will finish itself as people switch to a washing machine that can dry clothes after washing cycle has completed. Now, Stay Clean is trying to decide whether or not to cease the production of TD now or in 12 months time. Come on guys, what is our thinking? Should we close it now or wait for 12 months? Tell me, just write in the chat box when the new combined washing machine will be ready. To help with the decision making, the following information has been provided. Hassan Akram, what are you saying, my friend? I did mention right now that the mindset that we have to take is close it now. How can you write it 12 months then? I'm talking about the thinking. I'm talking about the thinking here, not the decision, my friends. So we'll think that let's close it now. And for our calculation, this will be our mindset. We'll take the decision at the end, okay? So are you people ready? So let's see what we have to do. The normal selling prices, annual sales volume, and the total variable cost for the three products are as follows. Okay. Selling price for all the three given to me, and all other details are also given to me. Now, let's read the second point. It is thought that some of the customers that buy TD, will also buy DW and WM. It is estimated that 5% of the sales of WM and DW will be lost if TD ceases to be produced now. So if we stop TD now, so along with that, we will be losing the sales of two other products by 5%. That is DW and WM, because those are maybe dependent product, but just to the extent of 5% only. Okay. So this is the lost sales that will happen. Now let's start with my workings. The mindset that I've kept in my mind is what? We will close TD. If let's assume if we close TD, okay? So loss of contribution, loss of contribution on TD. So how much will be the loss? Let's make this a working area. If I close TD now, so the loss will be 10 into 1200 units. Is this a loss actually? Yes, guys. Is this a loss? No, I don't think so. It's not a loss. In fact, it's a saving. It's a saving because right now it's a negative. It's a saving because it's a negative contribution. So it's not a loss. So I'll write this as 12,000 positive. And actually, this is not a loss. It's a saving. But yes, one would say that if you close a product, so the contribution that you were earning, it will stop. So one would treat this as a cost. But right now, as it is a negative contribution, so this is a saving. And if I connect this with rule of six, if I connect this with rule of six, so this is what? This is incremental revenue. Incremental revenue. Are you getting my point? Everything will be connected to rule of six. Secondly, loss of contribution on other products. So is this something that will happen? Yes, 5%. So let's work out. Units are how much? 5,000, 6,000 units. So 5% of 5,000 is how much? 250 units. 250 units. And 5% of 6,000 is how much? 300 units. 300 units. Are you seeing the calculation? Otherwise, you'll ask me again. I've taken 5% of 5,000 and 5% of 6,000. So now DW, WM, 250 units, 300 units multiplied by contribution per unit, and that is 80 for DW and 170 for WM. 80, 170, and if I add these two, my friends, so what figure are we getting here? People are working with me, or I'm just alone doing the calculations here. So it's 51,000, 20,000, and how much loss genuinely I will incur is 71,000. Wow. 71,000 is the loss that I'll incur, not 64. This is a saving. You are you are incurring a negative contribution. Okay, Farhan, we were having a negative contribution. So suddenly, if you close it, so the loss that you were having of negative contribution on TD will stop, and that loss will become your saving. If you are doing a loss and you stop doing loss, if you are having a loss and you stop doing loss, so that loss becomes what? Your saving. This is what my point is. Okay, Farhan? So what this is incremental cost. 71,000. Sorry. My pardon, my mistake. This is opportunity cost. Opportunity cost. This is opportunity cost. Okay? And here also, sorry, you are yeah, here also I would say this is an opportunity cost. So it's better opportunity cost, not incremental. My pardon here. It's opportunity cost in both the cases. Okay, it's opportunity cost. So loss of contribution is an opportunity cost. One is positive and one is negative. Okay, so loss of contribution, if you're losing contribution, so it's opportunity cost. Yeah, every time it's loss of contribution is opportunity cost. I just wrote it mistakenly. So I hope this is clear to all of you. 71,000 is simple. 5% will not be sold, and these are the contribution per unit as stated in the question. So I worked out 5% of these two, multiplied it, and this is 71,000. Sharon, because you are incurring a loss due to negative contribution. And if you close a product, Sharon, then that negative contribution is something that you will not incur, and that would become your saving. So this is how this is your saving. If you are doing a loss and you stop something, so that loss becomes your saving because it was a negative contribution. As you are seeing loss on DWD and DW and WM, because that relates to positive contribution. So for that TD, it relates to negative contribution. So this is how it is a saving. Okay, Sharon? So I hope this is clear. The connection with rule of six, opportunity cost, opportunity cost. Okay? September, because I've written this in a positive way, no? So that's why I written here saving. So actually this is a saving, but we would say this as an opportunity cost saving. If I'm writing a cost in a positive way, so it's a saving for me. Okay. Okay, friends. Now let's move on to the next thing. All the direct labor force currently working on TD will be made redundant immediately if TD is seized now, and this would cost 6,000. Come on. What is our mindset? Do we want to close TD now? What is our mindset? What is our thinking? Say yes or no. Yes. So this is what? This is incremental cost. This is incremental cost. Why? Because if we close it now, we will make people redundant. And if we make people redundant, this is what? This is incremental cost. Relevant, right? Okay, let's move on. So let's write here. Let's write here. Redundancy cost. And that is how much? Is 6,000. Okay. Even I can do one more thing. Let's write this collectively. Labor related cost. And let's do the working here. Okay. Now the first is redundancy cost of 6,000. And this is a relevant cost. This is incremental cost. Okay. Second, as I move on, if stake lien waited for 12 months, are we waiting for 12 months? Are we waiting for 12 months? Tell me, guys, are we waiting for 12 months? What is the mindset? The mindset is no. So it says if we waited for 12 months, the existing labor force would be retained and retrained at a cost of 3,500 to enable them to produce the new washing dyeing product. So it says that if we wait for 12 months, we will retain and retrain our existing staff. So our thinking is that we are not waiting for 12 months. And if we are not waiting for 12 months, this means we will not incur this cost. We will not incur this cost because we are not waiting. We'll make people redundant, okay? So we are not waiting. If we are not waiting, so this 3,500 is what? Relevant or irrelevant? It is relevant, and relevant because it is incremental revenue. Incremental revenue. Because we are not waiting. It says if we wait, we'll incur the cost. So we are not waiting. So this is an incremental saving for us. Are you getting my point, friends? So let's write here. Retraining cost and retaining cost. Retaining cost and retraining cost 3,500 is a saving. It's a saving. Okay, it's a saving. So it's incremental revenue. Agreed? Incremental revenue. Because we are not waiting. If you are not waiting, so you'll not incur. It's a saving. Then comes recruitment and training cost of labor in 12 months time would be 1200 in the event that redundancy takes place now. So are we planning to close now? Yes. If we are planning to close now, so redundancy will take place now. If redundancy takes place now, so we need to go for recruitment and training of the labor, and this will be incurred. So this is incremental cost, because if we close it now, so we need to make them redundant. If we make them redundant, so we will incur recruitment training cost. This is incremental cost. So I'll be taking here another cost of recruitment and training of 1200. This is incremental cost. So I am linking everything with the rule of 6, and if you just net off all these costs, so you will get 3700 as your incremental final figure. 3700. Friends, are we all clear? Are we all clear about it? Okay, so let me give you a quick recap. Because we are thinking to close, so we will go for redundancy. If we make people redundant, we will pay them 6,000. This is so much simple to understand. We'll pay them 6,000. Once we make them redundant, so they are no more with us. They are no more with us. If they are no more with us, so we don't have to retain them and retrain them. We don't have to retain them and retrain them. This means we will not incur this cost of retraining and retaining them, because they will leave. They will leave. So this is a relevant cost. I never said irrelevant. I said incremental revenue, Naveed Ali, incremental revenue. So we will we will not retain them. And because we have made our existing people redundant, so we need to go for new recruitments and trainings that will incur 1200. Okay. So the final figure is 3700. This is incremental cost, incremental revenue, and incremental cost. I hope this is clear. Now, friends, let's move towards the next one. If stay clean, it says if stay clean operates, sorry, just leave point 4, because in paper, let's suppose this is too big. Oh, I'm confused. Oh, this is a too big point. Let's leave it. It seems to be difficult. It seems to be difficult. So let's leave difficult things. Let's go for easy marks. This is what I want to tell you, people. We need to find out easy marks. So let's find easy marks. Okay, let's find what? Easy marks. So it seems to be difficult. Let's quickly get easy marks. The space in the factory currently used for TD will be sublet for 12 months on a short-term lease contract if production of TD stops now. Okay, if it stops now, you will sublet the space. Okay, the income from the contract will be 12,000. The income from the contract is 12,000. So now what our thinking is, will we close it right now? Yes, we'll close it right now. If we close it right now, so we'll sublet it. And if you sublet it, you will have what? 12,000 earning. 12,000 earning, right? Yes, guys, 12,000 earning. So what our mindset is, let's close it. If we close it, we'll sublet it. If we sublet it, we'll on this. So this is a relevant figure for us, and we will write this sublet income of 12,000, and this is my incremental, what guys? Incremental revenue. Sublet means to give the space to someone else for rent. Okay, so 12,000 is my incremental revenue. Clear, guys? Then comes the supervisor, currently classed as an overhead. Supervises the production of all three products, spending approximately 20% of his time on TD. He would continue to be fully employed if TD ceases to be produced. Now, if we close, so will we employ him? Yes. Will he be fully employed? Yes. So is this a relevant cost? No, because he continues to be fully employed. This is a committed cost. What is this? Committed cost. This is a committed cost that we keeps to employ him. We need to pay him the salary. So the supervisor is a committed cost. Nothing will come here. It's something I'll link with the rule of five. So it's a committed cost. Now this is a 13 mark requirement, guys. 13 mark requirement. And I've left just point 4. Let me tell you the marking scheme. 1 mark for this, 1 mark for this, 2 marks for this makes how much? Makes how much? 4. From 13, you need 6.5 to pass, okay? 6.5 to pass. So 4. And for these two calculations together, you will get 6 marks approximately. 6 marks. 6 marks approximately. So 10 marks out of 13 are done, and I haven't seen point 4. This is what I say easy marks. Okay, let me use different colors. This is what I say 6 easy marks. 1 mark, 2 marks, 1 mark, combined 6 marks, and 10 marks out of 13 are done. Wow, like it? Do you like this, guys? 10 mark are done. Understood? That is why I say go for easy marks. Go for easy marks. Go for easy marks. Now let's read the last point. Stay Clean operates a JIT policy, and so all material would be saved on TD for 12 months if TD production ceased. Now, obviously, equally the material cost relating to lost sales of WM and DW would also be saved, obviously. However, the material supplier has a volume-based discount scheme in place as follows. If your total purchase is 600,000, you are not getting discount. If it is above 6 till 8, 1%. If it's above 8 till 9, 2%. If it is above 9 till 9, 63%. And if it is above 960, you get 5%. Now, Stay Clean uses this supplier for all its material, for all its product it manufactures. The figures given above in cost per unit table for material cost per unit are net of any discount Stay Clean already qualifies for. So the figures that are given above are net of discount. Are what? Net of discount. Already qualifies for. Now we have to see first of all what is the relevant cost here. The relevant cost here will be loss of discount. Will you lose discount? Obviously you will lose discount. Why? Why you will lose discount? Because You will close TD, so your material purchase of TD will go down. Your material purchase of TD will go down. Along with that, you remember 5% sales will go down for WM and DW as well. So because of that, 5% purchase of DW and WM will also go down. Agreed? So let's work out loss of discount. For that, first of all, we are calculating what here? Loss of discount. Okay, let's do the working here. How to calculate loss of discount? First, let's find out our current purchases. Let's calculate our current purchases. Currently, we buy DW, WM, and TD. So, what are the units given to us here? 5,000 DW, 6,000 WM, and 1,200 TD. What are the material costs? 70, 100, and 50. And the question states that these figures are net of any discount that Stakelin qualifies for. Net of discount. Okay? But we don't know what the discount is. We don't know what the discount is. Net means after discount. So let's do one thing. Let's find out the current purchases. 5,000 units, 6,000 units, 1,200 units, and the material cost are 70, 100, and 50, right? 70, 100, and 50. So this makes 3,50,000. This makes 600,000, and this makes 60,000. If I add all, so current purchase cost net of discount is how much? 350 plus 600 plus 60 is 1010,000. Now this figure is net of discount, okay? This is net of discount. So through this figure, let's identify how much discount are we getting right now? How much discount? This is net of discount. So if your net figure is more than 960,000, if your net figure is more than 960,000, so how much discount you are getting here? It's 5%. 5%. Because your net figure is 10,000,000. It's your net figure. So if your net figure is more than 960,000, it's clear that you are getting 5% discount because your net figure is more than 960. Okay, so the discount is how much? 5%. I just wanted to know this. That's it. This means all these figures, here, all these figures includes 5% discount. All these figures includes 5% discount. Agreed? Agreed? This means all these figures includes 5% discount. So now let's work out the new purchases. If TD ceased, so let's work out the new purchase after TD. Come on, tell me if TD ceased. So we'll buy DW, we'll buy WM, and do you remember the sales would go down by 5%. Do you remember the sales would go down by 5%? Yes. So this means 250 units will not buy for DW and 300 units will not buy for WM because the sales would go down. So this means how much will I buy? Let's work out. 4750 will buy for DW and 5700 will buy for WM. 5700 for WM and 4750 for DW and nothing for TD. Nothing for TD. Okay. So I hope this is clear. 4750 into 70, 5700 into 100. This is 5,70,000. And this is 3 to 500. So if I add these two, so the new purchase cost would be 902,500. This is my new purchase net of discount. New purchase net of discount. It's simple. 5,000 units minus 250 units. 250 is what? Once you close TD, your units would go down by 5%, as you just saw above in your calculation here. See, 250 units and 300 units. Ruvimbo, is this okay? Ruvimbo, is this okay? So this is how I worked out 5740. Now, this is net of discount, and we know how much discount percent is included in these figures. How much discount is included in these figures? 5%, right? 5%, right? So this figure is how much percent? This figure is 95%. So let's divide this with 95 because 5% discount has been included. So let's divide this with 95 and multiply this with 100. So new purchase gross figure will be how much? 9,50,000 gross figure, because 5% was included in these figures, right? That I figured out. So this is 95% as 5% discount was deducted. So divided by 95 multiplied by 100 will give me new purchase gross figure of 9,50,000. So my gross purchase is 950,000. Now for how much discount will I be eligible here? So let's have a look. If your purchases are above 900,000 and till 960, you will get 3% discount. So from 5 we slipped to 3. From 5 we slipped to 3. If we close TD, so from 5 we slipped to 3. Are you getting my point, friends? So the question from Shafiullah is, how is 902,500 new purchases? Shafiullah, it's very simple, my friend. As I mentioned, if you close TD, you will not buy TD. If you will not buy TD, so there will be no purchase cost of TD, whereas you will buy DW and WM only, but that too for 95%. So if I multiply these with 70 and 100, the material cost that is already given to me, and these material costs are after 5% discount, as I showed you above in the question. So these are net of discount. Okay. So net of discount means these are 95% figures, right? Naveed Ali, because these are 95% cost as 5% discount is already deducted. I just showed you this 70 and 100 includes 5% discount element. Okay, Naveed Ali. And you can see here as well, the question did mentions that these are after 5% discount. Okay, so this is 95% figure. I'll divide this with 95 and will multiply with 100. So I'll get the gross figure here, gross figure. Now, how much discount are we losing? Previously, we were getting 2% and now we are eligible for 3. So how much is the loss of discount? So loss of discount is by 2%. Okay, friends? Loss of discount is by 2%. Are we clear? Okay. So let's work out the loss of discount. The new purchase figure is how much, guys? 950, right? On 950, we are losing 2% discount. So this means we are losing how much amount as a discount? 19,000. 19,000. 19,000 is our loss of discount. So this is my current purchase figure after discount of 5%. And this is my new purchase figure after discount of 5%. I brought this to 100% gross figure and then saw that the figure has slipped from 9,60,000. So now I'll qualify just for 3%. From 5%, 2% is my loss of discount. So 950 is my purchase now. And on this figure of 950,000, 2% is my loss of discount. And what this is, if I connect with rule of 6, come on, can you tell me what is this? This is this is this is loss of discount. This is opportunity cost. Are you all with me? This is opportunity cost. Guys, clear? And you will be awarded 3 marks for this calculation. This is opportunity cost. Okay? Opportunity cost. Mohammad Owais, I hope this is clear now to you. You are watching for this 4th point. Friends, are you with me? Come on, where are you people? Quickly reply. Okay. Now, let's take a decision. $1,000,000 points. Please tell what we need to do. Think of shutdown while doing the calculation. Done. Now what to do? Now what to do? Calculate the final net benefit and cost of shutdown. Let's work out net benefit and cost of shutdown for final decision. Let's see what we have here. So let's see if we close now. So 12,000 is the saving. If we close now, 12,000 is the saving. If we close now, 71 is the loss on other products. If we close now, 3,700 is the cost of labor. If we close now, 12,000 will earn. 12,000 will earn. If we close now, no supervisor cost. If we close now, 19,000 will incur as a loss of discount. So what is the net figure? So the net figure that we will get here. Yes, please. Can people work out? People are not replying. It's 69,700. Yes. 69,700. So this is 69,700. And is this a positive answer or a negative answer? It's a negative answer. Negative answer. Negative means cost or benefit. Is this a cost or benefit? So it's a cost. Net cost of shutdown. Net cost of shutdown. See the magic, how easy it became. If you think from one perspective, it's a net cost. And if it's a net cost of closure, if it is a net cost of closure, should we close it or not? So the decision rule says if it's a net cost of shutdown, the answer is not close. Wow, not close. So I hope this $1,000,000 point works for you. Just keep your mind simple while doing the calculation. Think of a shutdown. Think of a shutdown. Do all the calculations and then see whether the final answer is a net benefit of shutdown or a net cost. If it is a net cost of shutdown, don't close it because it is a cost. And if it is a net benefit of shutdown, then close it. So we can see here, it's all cost. It's all cost. Like the approach? Come on, tell me, did you like the approach? Guys, did you like the approach? Did this become easy? So think of a closure. Thank you, Mohammad Azan. Think of a closure. And once you're done with the calculation, just look at the end, whether it's net cost or benefit. If cost, don't close. If benefit, close it. The benefit of this is you are keeping your mindset at one place. I hope you like the approach. So I have linked everything with rule of six. Rule of six. $1,000,000 technique. If you have a cost of shutdown, Mohammad Wakas, if you have a cost of shutdown, you think if you have a cost on closure, if you're closing, you're incurring a cost. Will you close it? Mohammad Wakas, you will not close it because it's a cost. Okay. So I hope another $1,000,000 technique does wonders for you. I hope you like my way. The $1,000,000 plans, I'm telling you, these all are good. 69,700 I mentioned. 700, not 100. Okay. So friends, through with this one. Usman, anything that is a cost that you'll deduct, anything is that is a positive that you'll add. But it's so simple. Minus plus that you have to do. Okay. So Wakas, are you clear? Yes, guys, are you clear, everyone? Now, you all know about linear programming. Linear programming is used for multiple limiting factors. These are the non-graphical steps and these are the graphical steps. We identify answer through First, we define variables, then we set objective function, we identify limiting factors and convert them into inequalities, we identify non-negative constraints, we convert inequalities into equalities, we graph each equation, identify feasible region, identify points in the feasible area. And then to find out the optimum point, we use two methods, by inspection method and ISO line. Now, keeping in mind the recent examination method, it is very much expected that the graph will be given to you in the paper and you don't have to draw. The graph will be given to you in the paper and you don't have to draw. Okay? You don't have to draw. So you should know how to find out the optimum point. So there are two methods. Now, let's move towards a past paper question and then we'll see these $1,000,000 things. Let's move towards a past paper question. I'll make this again simple for you. So now I am moving towards section B question, and you can see on this testing platform I will run the section B question. So I'll input the details here very quickly. So I'm going into performance management. Performance management, and I am solving section B, Kara company linear programming. Let's see how it will come in the examination, the CB style. Let's start this test. Okay, here we go. So don't leave the session until and unless I complete it, because at the end I'll be doing some section A questions from here as well. Along with that, I will give you the $1,000,000 plan for this section. Okay. Now let's start the question. You can highlight the things here as well. Kara makes two products, and those two products are S and H. To make a unit of each product, the following scarce resources are required. So let's just highlight these. 5 kg, 7 kg for labor, 2 hours, 3 hours, and for machine again 2 hours and 3 hours. Okay. Now fixed overheads are 300,000 for the company. The contribution is given to you 250, and for H it's 315. Okay. The maximum demand for each month, this is important, 4,000 units maximum demand. The minute for H it's 3,000. Company has a legally binding obligation to produce minimum as well of H. Now this is a good thing. Minimum of H is 2,000, and this is for month 1 and 2. Okay. The manufacturing manager is planning production volumes and the maximum availability of resources. So you are provided with the available resources for month 1, 2, and 3. Okay, and we have a graph here. Now, question 1. What is or are limiting factor in month 1? Okay. Now, one thing that is really important here to figure out that this linear programming graph is just for month 3. This is for month 3. So we don't have to be concerned about this graph for month 1. This is for month 3 only. So let's focus on month 1 and find out the limiting factor. So what is the limiting factor in month 1? Let's do a quick calculation. Let me just open the answer, paper-based question of this as well. This is the spreadsheet version, and on the paper-based, I will do the working so that you are easily able to relate it. So I do have that available in my in front of me. So it's the same question I'm opening. I just wanted to give you the CB version glimpse. That's why I just use that. Now let's do the calculations here. The first question is, what is the limiting factor for month 1? Okay. So I'll do calculations in front of you here so that you are able to understand. Now, limiting factor I need to find out. So 4,000 units maximum demand I have. Let's do a quick working to see in month 1 what is the limiting factor. So S and H we have these information. So 5 multiplied by 4,000, this makes 20,000 kgs for material. Okay, I don't have space. I think let's use this space. It's much better to use. Now, for materials, S and H, 4,000 is the minimum demand that you have to fulfill at any case, right? 4,000. So, and you know the per unit as well, 5 and 7. So 5 into 4 is 20,000 kgs required for S, and the per unit is 7 into 3. 7 into 3 is 21,000 kgs, okay, of material. So altogether, how much you need for material in month 1? So you need 41,000 kgs. 41,000. Okay. And how much do we have in month 1? So in month 1, you have 18,000 available. You have 18,000 in month 1. Are you getting my point, friends? 18,000 you have. So how much is required? 41. How much is available? This is required. Okay. This is how we found limiting factor as well. This is required versus available. So how much is available? 34. So yes, there is a shortage. Now let's do quick working for labor and machine as well. We know the units, 4,000. Same here. We know the units, 3,000. I'm going with maximum units, okay? And let's input the details. 2 hours and 3 hours. 2 and 3. 12,000 plus 9,000 is how much? Sorry, not 12, 8,000 plus 9,000 is how much? 17,000. And how much hours do we have here? We have 18,000 hours. So is this the limiting factor, friends? Is this the limiting factor? No, this is not the limiting factor. Agreed? Last, 3 and 2. 3, 12,000 plus 2, 6,000. 18,000 is required. So how much do you have here? You have 18,000, I think. So is this the limiting factor? No. 18,000 is what you need. And 18,000 is what you have. So this is not the limiting factor. And this is clear. The limiting factor is material. Okay. So hours required with that. So this is month 1. And this is a single limiting factor situation. What is this? This is a single limiting factor situation. So this is a single limiting factor because in month 1, there is just one limiting factor. So the correct answer here is materials only. Clear? Let's move to the next one. Yeah, this is the condition in the paper. Now the second is the production manager has identified that only one limiting factor in month 2 is labor hours. Okay. In month 1, the limiting factor was material only. In month 2, the limiting factor is labor. What is production volume for H for month 2 to the nearest whole unit? Okay. So you need to find out the number of units. So what are we supposed to do, friends, here? What are we supposed to do here? So we know the limiting factor in month 2 is labor hours. And how many hours are available for month 2 labor? 12,000 hours. Let me highlight this. Okay. So this is 12,000. I hope this is clear. Now, how I need to work out how many units should we make. So here again there is one limiting factor, and this is known as limiting factor analysis. Key fact Limiting factor analysis. So let's do a quick working SNH. Contribution per unit. Do we have contribution per unit? Yes, 250 and 315. 250 and 315. Okay. Let's divide this with labor hours per unit. Labor hours per unit. Labor hours per unit. So how many hours of labor are available? 2. See? And 3. So this is 125 per hour contribution per hour, and this is 105 per hour contribution per hour. So we need to rank this. This is more. Okay, this is more. So first and then second. But remember, there is a minimum requirement here of 2,000 units. Minimum requirement. So first we need to fulfill this minimum requirement of 2,000. So how many hours we have in month 2? 12,000 hours we have. So let's do a quick working here. Available 12,000. Due to minimum requirement, first we will produce H. 2,000 units into 3. So 6,000 hours we need to spend on H. And then we are left with 6,000 hours that we will spend on S as per ranking. So why we didn't follow the ranking? Because we didn't had the option because of minimum units. Agreed, friends? So 6,000 hours we'll spend on which product? S. Divide by 2 hours per unit. How many units we can make for S? 3,000 units for S. 3,000 units for S. And what is the demand for S? So the demand for S is 4,000. Still, we are not fulfilling the entire demand. Still, we are not fulfilling the entire demand because of the minimum that we have to follow. So what is the answer for H? 2,000 for H. 2,000 minimum for H. The rest we'll spend all on S. Are we clear? Are we clear, friends? Say yes or no. Now, shadow price concept. So, shadow price comes into play when there is linear programming. So, month 3 is the area where there are multiple limiting factors. In month 3, there are multiple limiting factors. Getting the point? So, when shadow price comes, which means linear programming comes. Friends, now, if the shadow price is for month 2 is 125 per labor hour, which of the following statement is or are correct? For H, I mentioned that minimum 2,000 you have to fulfill as per the question. So that's why we were bound to fulfill 2,000 units and we didn't went for S as per the ranking first. This is what I said. Now, if shadow price for month 2 is 125 per labor hour, which of the following statements are correct? The production manager would be willing to pay existing staff a maximum overtime of 125 per hour for the next 2,000 hours. So what is a shadow price? So a shadow price is what? Shadow price is the additional contribution. It's the additional contribution. So yes, if one more hour, you if you go for one more hour of labor, so how much maximum can you pay? Is 125. If 125 is the shadow price, so this is the additional contribution. And this additional contribution is something that you can pay as overtime. Okay. So this is additional contribution per hour. So this you can pay as maximum overtime. So this is a correct statement. Second, the production manager would be willing to pay maximum 170 per hour for additional 2,000 hours of temporary staff time. So this is the overtime that you can pay maximum according to shadow price. And what about the maximum total pay? So is this correct? Yes, because 125 is the premium that you can pay, overtime premium per hour, plus the basic wage of the labor is 45. The basic wage of the labor is 45. So 125 plus 45 is 170. So if you say about the overtime premium that you can pay is maximum 125. If you say total pay, so total pay maximum you can pay 170, including the basic wage. Got it, guys? Including the basic wage. Clear? Understood? Okay? Come on, where are you people? Say yes or no. Is this clear to all of you? So yes, both the statements are correct, and the correct answer is option C. Option C. Clear, guys? Now you have to solve this by your own. What is the maximum profit earned in month 3? And here comes the linear programming graph. Here comes the linear programming graph. Okay, this 45 came from the above information per hour basic wage of the labor. 45. See, per hour basic wage of labor, 45. Okay, friends. So now the remaining two MCQs you have to solve on your own, 24 and 25. Let me tell you the attempt. It's March, June 2019. Mercy, is this clear to you? March, June 2019. And these two you have to solve using linear programming graph, as you can see here. And you have to find out the answer. So section B now will be represented like this in the paper. Are we clear on this? True, guys? Mercy, is this clear to you as well? So the last two you have to solve, and I'll discuss the answer in the tomorrow session at the start. I'll discuss the answer for sure. Now, let me give you a quick plan for the today's. Now, CVP analysis is given to you here that you have to cover from previous webinar. I've covered this in previous session in a very detailed way. So this is the plan. Transfer pricing. Another question you have to watch from the previous webinars that I took. So this is the link of that you can use. Plus, another question that you should solve is Bath Company from December 2011. This is a good question for practice. For relevant costing, you have to watch my previous session for one-off contract. I've given the link here. So do watch this question for further one-off contract. And this is another practice question for you people. For linear programming, again, you have to watch my previous session. I did a question, CSC company. So this is how we can cover the entire PM syllabus. Okay, this is my plan that you have to follow. And this is a question for further practice. For CVP, this is another question that you have to watch from the link. And then this is the practice question. So for linear programming, this question that we are doing right now, I'll complete the two questions that are homework for you. So do make sure that you solve the two remaining parts which I mentioned here. It's March, June 2019. I'll discuss the answers of these two. And if you have any problem in these above ones, so I'll discuss that as well for you tomorrow. I hope the today's session went well. Give your feedbacks, guys. Did you like the today's session? Did you learn new techniques? Come on, tell me quickly through the chat box. Yes, please. What's your feedback? Were the $1 million techniques today worth it? Yes, guys. Did you like the techniques for transfer pricing, for relevant costing shutdown? Okay, I will solve the remaining two tomorrow. But you first solve it, I'll solve the remaining two. Okay, I hope you like the today's session. I will solve the remaining two and will make that easy for you. Don't worry. Now you can WhatsApp me for the group. If you can't join, this is the link. Either join through this or WhatsApp me. I'll send you the link. I'll share certain answers, drafted answers that I discussed today, and the rest you will get to know through the group. Thank you very much. Have a nice day. See you tomorrow. Bye.